Hi, this is Mark with your analysis for the week commencing the 23rd of June. Just before we go into this week's analysis, let's look back as ever at what happened last week. And I was explaining on the Euro USD how I had a feeling, even though price had broken and closed above this major monthly 55 EMA, I was very wary. I just had a feeling that the Euro run-up was overbought. Stochastics were giving me that clue as well. There was also a clue on the weekly Bollinger Band, and I mentioned this in Wednesday's update. When Bollinger Bands start to close like this, this is indicative of price drying up, and this was probably due to FOMC. And I explained on Wednesday that often what happens, this is a never in a million years Bollinger Band, often price comes up, will touch and even spike to the band and then promptly drop back down. And it did it textbook. So these were technical clues before we got that major news from the FOMC. So back to the Euro, what I did say was I was interested more in shorting than longing. And a few of you emailed me and said, but why? And I explained it was a feeling, it's probably experience and technical clues. What I did say was I would be interested to short at a break and close below 133.00. Now this was the FOMC news, and the candle closed teasingly just below 133.00, and it pulled back to the line and it then dropped 200 pips. And you can see this more clearly on a 4-hour chart. This was the big reaction after FOMC. Very next candle comes up, touches it to the pip and plunges hundreds of pips. I didn't take it, to be honest. It was midnight my time, and after such a big move I wasn't sure whether we'd get a bigger pullback, but that was a textbook breakout followed by a pullback. Equally on the British pound, I had said last weekend, this was previous Friday's candle, I was interested to long at 56.20 and with my stop just below the 200, and I showed you again on Wednesday's update how it worked and how placing my stop below the EMA gave me a winning trade. Euro yen, I just explained I was looking after a major break of a major area and a trend line. I was looking to short at 128.00, and this one prior to FOMC went 100 pips. After FOMC it then raced off and went in the other direction. Dollar yen, I was waiting for a pullback all the way to 98.66. Didn't get it, didn't quite get it, and when we were getting near was Friday. But after a major FOMC news, because we were down here with FOMC, that was still my area of interest. Swissy was a better one. I was told you I was looking again, break of a trend line and an intersection of this weekly 55 EMA, and I looked to short at 93.30. Day after FOMC, we had this major pullback, and again, this one went 100 and odd pips. So these were all moves predicted in advance, and I explained last week why I was looking for them. Other things that went on, I explained that with the euro pound I was only interested if price broke and closed below 84.70. I was looking for a break of this fib and this recent support, because look, it bounced 2-3 times prior and it did it again last week. So it kept you out of a losing trade. Counter trend traders trading more aggressively could have caught the move back down. Aussie dollar just continues to fall off a cliff. Very frustrating. In recent weeks I've been shorting at 96.00 and had some decent winning trades. Last week I tried to be a little more aggressive because we kept getting pullbacks to 96.60 in previous weeks. So last week I said, okay, I'm going to go for 96.60. Murphy's Law came back to 96.00 perfectly. I went 400 odd pips, which was very, very depressing. I then had a complex entry planned on the card. I showed you how to place the order and split the order in half. If FOMC news had come down, and we were up here around here for FOMC, so therefore those were still areas I was interested, but the news came out positive for the dollar and bang, off it went. So missed it. But all in all, not a bad week's trading, and again, I'll show you now what I'm looking for the week ahead. This is the British pound dollar on a weekly chart, and you will see, and you'll notice on this quite a few pairs, this is what's known as an engulfing candle, where the whole of the body of this candle engulfs the whole of the body of the preceding candle. And this is a clue to a change in direction from candlesticks. If you were trading this from a weekly chart, then what would you be doing? You would be looking for a pullback to short anywhere around 155.80, which is this monthly 55 EMA, and an intersection of that previous upper trend line. So So 55.80 is the main area of interest at this moment in time for a potential short. You then go down to a daily. Well, on a daily, we've had a break of a daily 200, and that is around 55.60. So this is the zone for me for a pullback. I want to show you something. This week's a little more tricky in terms of picking forward order moves, because we're not sure where this is going to go. If it carries on down, then we have major areas on the way down where it might simply just bounce off, and 5300 is one of those areas, so you'd have to watch that. Have a look at this. This is a 4-hour GBP dollar pair, and I was going through this with a student the other day, and I've shown you this in previous weeks and months blog posts. We had a channel started at the end of May on this pair, and what it meant was you had the opportunity to long each time price hit along this trend line. Remember, we go 10 pips above if we're going to go long, and the size of this channel was roughly 240 pips once it got going. So you had the opportunity. Initially the upper channel was here, so you still had the opportunity for around 100 pips, and then it got going further on. So the good thing about this type of trading is you only need a small stop. You use fibs, you also use EMAs, and you're looking for major areas of support and resistance. But for example, had you caught this move here, that went 400 pips. You then fib it and you start looking for another move along this trend line. So this worked half a dozen times on the way up. We then got to a scenario where price had you longed here. Price was clearly struggling around 5700, and it was almost a double top area. So this area here would have made you nervous and make you get out. Now, as of last week, we had a breakout and a pullback, and we are now going down. So the same principle applies. You are looking for bounces off trend lines, and the upper trend line here spookily intersects with that 5500 and with those other longer term EMAs as well, the monthly and the weekly 55. So what you do with this kind of situation is, if you're trading through the week, as price starts to move down, you're looking for a pullback, and it will be, for example, if the pullback comes first thing Monday, then that is the area we're going to be looking for our entry. If it happens later in the week, you start to lower your entry target because you're going to go with this trend line. And for example, if it was to happen Wednesday, Thursday time, say, you would be looking to enter here. Aggressive entry would be you stop just above the daily 55, or more conservative, you will be going above one of these. But that's a 50 odd pip risk for a potential reward of 250, i.e. 1 to 5 risk reward ratio. The other option with this type of strategy is, if price was to break and close below the lower trend line, and you need it to close on a 4-hour at least, then you look for a pullback for a short and a continuation move back down. And I would suggest you look at 4-hour charts this week as much as daily, because this is where I feel the best opportunities lay. Similarly, the Euro USD monthly chart, we didn't break that upper trend line, price rejected at these EMAs, and on a weekly we have this engulfing candle situation again. And I showed you how the Bollinger Bands last week gave a big clue that price was going to struggle. So what do you do with this pair? Well, I'm only interested to short, and if it continues down, it's going to be tricky for me, because we've got these EMAs here around 30.70. You've then got the major hold number of 130 just below, so that's tricky. I need a pullback. The ideal area for a pullback is anywhere around 133.00, which was that major area of previous support and resistance I showed you on the daily before. Previous week we were bouncing along. This is that monthly 55. Here you've got the weekly 200, and price was simply bouncing along. And whereas last week I'd said look for a break and close below 130 to get away from this lot, now if you've missed this move, what you're doing is you are hoping it's going to go all the way back up here. Now the euro is trickier because the move was more severe. If we go to a 4-hour and we start putting channel lines on, this is a very narrow channel at the moment. I did now a channel, it's roughly 100 pips top to bottom, so it's not all bad news, but you've got this 130-100 here, major previous support and resistance in the way. I do feel that the pound or the Swissie are a better option this week for this kind of strategy. 55 will roll down as price continues to go down. If we get a spike up and this channel becomes a bit bigger, it might be a bit more tempting, but at the moment it is tricky because of the severity of the move. but you could be interested for a pullback for 132.00, previous support and resistance again, upper trend line, low pushing it, and the EMA will roll over. But the main area, if you're going to place a forward order, I would recommend you consider 133.00 or just below. This is that dollar Swissy, and I've shown you in the start of today's video how we've pulled back to this major trend line that goes back to January earlier in the year, and you've also got this weekly EMA. However, we've got an inside bar suggesting a move up, and of course if the euro is going to tumble, then the Swiss is going to go up. This one, if price breaks and closes back inside the trend line, then I will be interested to long this pair with a target of 96.00 on the way up. But once again, it is a bit messy in this area here. So this is the crucial area. If price starts to turn back down again, then look on a 4 hour for clues for a move back down. If you're going to go long, even a number of options, you can be very aggressive and just simply go for a break of 93.60. Your problem then is the trend line is just above and the EMAs are just above as well. Or the more conservative entry is look for a break and close above the EMAs, and then a pullback and possibly as far as the trend line, then with a move upwards. Euro yen, nasty spikes here now. I showed you how last week we had a winner on here. These are 120 pip spikes in a day, and it makes it very, very difficult to trade because you get in, it whips one way and it whips the other. This was an indecision candle, as was the preceding day. It's all a bit messy for me now. 128.00 was key. If you're going to be aggressive, then be interested to long around here. I mean, personally, I'm going to leave this for a day. The best way to play this, the safest way, is to play it off a daily chart. Dollar yen, we're coming up to this 98.66 area, and therefore it is a major line in the sand. Again, the difficulty here is because of this dollar news, is this dollar strength going to continue or is it not? I will not place a forward order on this one either, but I will be watching this area. And if we start to see some 4 hour candles, and you're looking for candles like this, indecision candles, as we just shown you, let's have a look back at that Euro USD. Here, prior to FOMC, we had all these indecision candles. And that's what you're looking for when you're looking for clues. You're looking for a clue that price is likely to turn back down again. So if I start to see that arrangement moving along here, then I will be interested to short. But I wouldn't take this on a forward order at the moment. Aussie dollar yen. Now this is a bit more interesting, and each week I try to pick the yen pair that looks the most promising for me. And the reason being is you don't want to be in more than one yen trade at a time. Now, interestingly, price stopped and closed just above 90 on, this is a weekly chart on Friday. And look, pin bar indecision candle here, spinning top indecision candle. Where does it stop? Well, let's look across to the left, and you have previous resistance in 2011. You have previous support and resistance, a bit messier here, back in 2008, 2007. 2006. So traders all over the world are aware of the fact that price is now struggling in this area. It's 90, which is a whole number, and below here we have a trend line on a weekly chart that goes back to April 2012, so it's more than a year old. If price drops at the market open, I will be looking, I will move my support and resistance down around here, because this also, if you start looking across to the left, was relevant. It was a bit messier, but there was reaction going on here. But an intersection then of the trend line and previous support and resistance. So if it drops like a stone or it drops at the open, I will be interested to long there. However, if on a daily and on a 4 hour we start seeing these candles looking like it's going to be bullish, I'd be tempted to get in now. We've got this MACD divergence here, which is, you can see price clearly on the daily is going sideways, and yet MACD has started to go up, which is a clue. Stochastic still undersold, but we're almost getting a 5-8 cross. There are clues here. We could be on for a move back, and I would be targeting 92.40 area as my overall target for this pair. Euro GBP. Showed you last week we kept out of a losing trade, and that's the first step as a Forex trader, any trader. Your first thing you want to do is to avoid losses. This is a trend line that goes back to April. Everybody in the world again has noticed this. It's also 61.8 of the recent move up. Last week's Friday candle is a bearish candle, but we're coming back down here. I am interested to short this pair if we get a clear break and close below the trend line. Now, the more aggressive entry on this is you look for a break and close below the trend line, and I would then look for a pullback to 8,500 with a view to a short. I always go in heavier on the euro pound because the average daily range is much smaller. It's more than half the euro. But I would get my stop to entry after 15 pips, and the reason being it may well bounce again off this previous area. Why? Because it's done it lots of times before. The more conservative entry is you wait for a break and a close below here, 84.70, let's say, just below this fib area, then a pullback, then a short. But that is what I'd be interested in. I'd also be interested if we get back up to 8600 area in a counter trend short, half stake. Aussie dollar fell off a cliff. I was looking for where price was going to stop last week, and I'd put this line on, and this is where it stopped on Friday, but it was messy. There's talk of the Australian government wanting their currency down around 80, so we could be on for more falls here. Forward order, I would forward order from this weekly analysis at 95.80. We could now be on for a sideways ranging market. If you're going to trade it daily, look around 9400. This was support and resistance. It's a bit of a fib, and therefore that will be, if you're looking intraday, that will be the area of interest as well. Finally, the dear old loonie. The CAD here has broken and closed above 104.20, and it's messy, but it has been a double top, and it was messy back here for sure. But price significantly, we're waiting really. The best thing to do is wait for the monthly candle close, because what's happened here, last month we did close above this 55, and it's the first time that this area has been broken and closed above since 2008, I believe. And this current candle at the moment is a very bullish candle. Now, it won't close till the Monday of the following week, but it could signify a major move up on the dollar CAD. So what do you do about it? Well, an aggressive entry on this is a pullback to 10400 and simply take the long. A more conservative entry would be a pullback down here back to that monthly 55 EMA. And again, this could well be the scenario. The CAD has some nasty spikes on it. What I'm going to do with this one, I'm going to do the opposite of last week. I'm going to take half of the trade here at 10400, and I'm going to take the other half of the trade down here. I'm going to go for 103.55. So you take the overall amount that you are staking on this trade, and if you're going to do this kind of thing, it's known as scaling in. And the reason why we're doing it is it may only get to here, and therefore we'd miss this second part. But if it pulls out this second part, this will be into profit quicker than the first. So you take your overall amount that you're going to stake, and you then split it in half. And again, for stops, well, the safest place for your stop is down here. So it would mean this trade is going to have a stop of around 80 odd pips, and this trade would have a stop of around 30 odd pips. It's likely to struggle at 105 is this pair, but as I suspect this could be a big major move up, then I am willing to let this go. So I'll get my stop to entry as soon as I can, but not take any profit and let it go, because at the end of the day we could be on for a major move up on this CAD. And I can remember a few years ago we were trading this around 130, so a lot of room here for growth if the dollar is going to go on a surge. Okay, that's it. Have a good week. Catch you later.